individuals that will have that preference of taking the metal over in exchange for the property because of what's really happening inside of the market. And it's quite clear when we're in it that the currency is losing value rapidly. It's kind of, this is why governments and central banks don't really like gold, because it's so private.
Understanding gold and silver prices and historical events during the Great Depression can help provide a more informed view of what might be happening in the current macro environment. Gold prices are influenced by inflation and the money supply, and the inflationary environment of the 1920s and 1930s looks a bit like today's inflation-deflation environment. Many investors hold gold and silver to protect themselves against various economic crises. But does this coverage hold up during stock market crashes? Knowing what effect a market crash and subsequent dollar collapse will have on silver and gold is essential for making investment decisions from time to time and deciding what to do in the event of a major recession or depression. In today's video, we will share why Lynette Zang believes gold and silver are the biggest safeguards for the upcoming depression. But before we get into the video, make sure you subscribe to our channel and press the bell icon to never miss an update.
There's going to be a certain level of cash as your first line of defense. And then there'll be different kinds of gold and different kinds of silver depending upon the goals that you have. But I don't really ever care about the price because they have to suppress it, especially where we are right now in this trend cycle. They have to suppress it, trying to keep you away from it. But it's a huge bargain.
You are doing the safest thing you can do, and now is the time to be as safe as possible. It is not a trade. And then there will be, if indeed you are, there will be some level of silver as a first line of defense. And then there will be different types of gold and different types of silver depending on what targets you have. They don't really care about price because they need to suppress it, especially where we are right now in this trend cycle. They have to suppress it, trying to get you away from it. So all the clues we're getting right now are about the fragility of the system. And we know that we have Wall Street, or we have the banks going and talking to the Senate today because they want to increase reserve requirements and collateral requirements. So things are changing, trying to get the financial system in a position to weather maybe this big storm. It's not just a little storm. It's not just 2008. It's going to be much bigger than that. You have the central banks of the world, including the Federal Reserve, raising rates to combat demand inflation. Although that is not what exactly creates inflation, but you have to raise rates, and they're very determined to do so. And then there are governments stepping in and basically stimulating the economy and stimulating spending. So you have them at odds right now. You have governments and central banks at odds. It means that anything can happen in an instant, and we won't know it. You must have money in the bank, but you must also have money in the bank. And that is your first line of defense. So what do we have? We've got everybody, all the talking heads on TV talking about the recession. So what will the Federal Reserve do? We are already in a technical recession, although they try to change the definition. But when you're at the end of the coin's life cycle, everything is catastrophic and nothing really makes sense. And central banks are currently fighting for their credibility, and it's a very dangerous place. Now we have the Fed accounts. They will just put a bunch of CBDC into your account for free, or apparently for free. When they finally do that reassessment overnight, that's a different story. So when they first come out with CBDC, it's always about continuing to devalue the currency. Now, when they do the overnight reevaluations, and they really want to absorb the entire monetary system, then it could be 1,000 to 1. The people who will have this preference of taking the metal in exchange for the property because of what is actually happening within the market. And it's pretty clear when we're at it that the coin is rapidly losing value. That's why governments and central banks don't really like gold, because it's so private. In this next recession, we're really looking at a depression, and they're calling it a severe recession.
I was watching Lehman very, very closely back in 2008 because that was my alma mater, so I have kind of a little feeling, about it. And I couldn't have told you 5 minutes before we were going to have a Lehman moment. So all of the clues that we're getting right now is about the fragility in the system. This isn't just 2008. This is going to be so much bigger than that. So a big part of it, Annette, is just to get into position, and then if you're surprised, you're surprised. because we aren't a black swan. You're not going to know 1 second before.
That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.